there's a couple of things that are a little bit different about this. This is the first time in our history where we've seen actually retail lead and institutional follow. But
but do you see TradFi becoming a user of DeFi at some point?
Absolutely. We're already using smart
that are being undertaken within regulated financial environments. And so that really, then we think about the nature of how organizations are using this as a stepping stone to then what comes next. Then now we're at that point where the earlier stages of scaling up some of these particular transactions.
And I think the next bull market cycle, this is a physical example on how institutions, they only have access to 7.25%, according to this platform, to stake their XLR. And we, as retail investors, have access to 8.76%. Alrighty, what is going on, everybody? Welcome back to another CYPRX video banger. In today's video, we have some amazing fundamentals and some video clips that I'm going to be playing for you all and jumping through, really showing you all that as retail investors, we have a once-in-a-lifetime opportunity to front run the financial institutions. And I'm going to physically show you guys examples of that in today's video breakdown. We're going to be going over some video clips via some panel discussions that not a lot of people pay attention to, just discussing and talking about how banks are for a fact interested in utilizing DeFi, how they are coming to DeFi, and just showing you all why, again, as retail investors, your main focus in the crypto ecosystem should be growing your wealth in the now by utilizing DeFi, expanding your portfolio simply by deploying into the DeFi ecosystem, earning yield on your digital assets consistently, passive income always flowing in, you know, growing your wealth, and then also fixating your attention on how to maintain your wealth after the next bull market cycle and not sell your digital assets for fiat, thinking that that is the road to financial freedom. Okay. So, that's what we're going to be jumping into in today's video breakdown. This might be a lengthy one. We're going to be playing some video clips. I'm going to be reading through some fundamentals and physically proving you all that right now, as retail investors, we have the upper hand. So somebody in the comments said chicken flipping. That means I know that you're a part of the CYPRX private community, because we were talking about chickens taking our trades for us in the chat the other day. So let's present screen real fast. Shout out to everybody on the call so far. I wanted to just jump on this live. It was unfortunate because Mr. Ak was 2 hours behind. He was unable to join this live with me. Maybe he'll wake up and he'll tap in here in a second. But I want to just continue down the rabbit hole and really jump in and enlighten you guys on what's happening behind the scenes by starting off with a couple of video clips via some panel discussions. All right. I was going to actually put the fundamental information first, but we're going to switch it off and go into the panel discussions first. So I said to you guys on X the other day, the recent market correction, along with any future fluctuations before hundreds of institutional investors arrive, should be viewed as an opportunity. This is obviously, of course, my personal opinion. To each his own. Assess your own personal risk properly. But retail investors right now have a once-in-a-lifetime opportunity. Now is not the time for fear. Now is the time to be well-informed, to be diversified, and strategically positioned for the upcoming wealth transformation. All right? Smash that thumbs up button if you agree with me. And if you're a little bit confused and you've been following the wrong people on X or YouTube that have been constantly pumping hopium or fear, uncertainty, and doubt into your minds, and you haven't found an equilibrium in the market yet or consistency in the market, then I'm telling you guys, you're going to want to tap in. Okay. So let's move on. I posted this to you guys. This was probably one of the biggest things that came about from this year, 2024, was this DTCC representative confirming what it is that I'm talking to you guys about. This got 43,000 impressions on X when I shared this. And I said to you guys in this post, the DTCC just confirmed that retail has the upper hand on institutions for the first time in history. And I'm going to physically show you all that that is to be a fact in today's video breakdown as we progress through the fundamentals in these video clips. So make sure that you stick around for the entirety of this, because I'm going to physically show you guys examples how here in the CYPRX Wealth 28 Club, we are giving our private community members physical examples, of how you have an upper hand as a retail investor to earn higher yields than these financial institutions on the same exact digital asset products. Okay. So just take a second real fast. I'm going to play this video clip so that way, you know, we clear the air and you all don't think that this is me telling you guys that you as retail investors have an upper hand over financial institutions, and instead hear it from a reputable individual from the DTC DTCC confirming this for you guys. Listen here.
Institutions are coming, the institutions are coming, right? And we're starting to see progress where more certainty in the market is helping institutional adoption, such as the approvals of FIT21, other instruments, both ETH and Bitcoin, spot ETFs. Those have been super helpful in pushing the movement forward. It just shows you there's pinned up demand. It is pushing through. There's a couple of things that are a little bit different about this. This is the first time in our history where we've seen actually retail lead and institutional follow, but the certainty that we're getting right now from the regulatory and the legal framework.
Right. So we'll pause it right there. She literally just said this is the first time in history where retail is leading the charge and institutions are following. And I'm going to, again, physically show you guys examples as we progress through the fundamentals. But let's just finish with these video clips. This is an individual. His name is Robert Lischner. He is the CEO of Superstate. If you guys on your own behalf want to take it upon yourself to go look and research into what Superstate is, they are a collective group of financial institutions that are attempting to integrate and transform this Web3 ecosystem in a nutshell. Okay, but just go look it up on your own time. I just wanted to show you guys another video clip of a reputable individual in this space with credentials. He was also a co-founder of one of the largest DeFi platforms called Compound back in the day. I don't think he is anymore. He's not really heavily involved with Compound anymore now that he's taken upon himself to, progress in other ways in the Web3 ecosystem, but just show you guys his credentials and listen to hear about how he talks about an order of magnitude of finance coming into the DeFi ecosystem in particular as we progress in the regulatory environment and as this ecosystem matures. So just take a second here and listen. And the reason why I'm playing these video clips and the rest of them to come is to show you all how early we are in this space. Right now, if you go look at the DeFi ecosystem and the TVL that is locked, we're probably hovering at around 80 or 90 some odd billion dollars. Okay. That is going to exponentially increase in the next consecutive couple of years as institutions onboard into this space, especially as the search for yield continues to grow in a low interest rate environment. You're not going to want to miss out on understanding DeFi and how to get your digital assets working for you, because these financial institutions, I'm going to prove to you guys in today's video breakdown, are 100% going to be utilizing their digital assets to earn yield. So why would you not want to be able to do that, right? Take a second here and listen to what he says.
I felt like we'd built an incredible ecosystem, but at the same time, what kept on gnawing at me as a DeFi founder was the fact that the assets that were being traded, that were being borrowed, that were being derivatived, that were being used on chain never really seemed to change. It was, Ether, wrapped Bitcoin, a couple governance tokens, a couple stable coins, et cetera. And the list really didn't evolve that much from like 2017, honestly, to 2023. And when I first got started as a builder in crypto, my expectation was like that surely within 5 years of starting, without question, every asset would be on chain, stocks and bonds and commodities and real estate. And, it would all be assets on chain that could fit inside DeFi protocols. But by 2023, nothing was fitting inside DeFi protocols really, besides crypto native assets that were issued for the first time on a blockchain, typically the native token of some other crypto project, never really a non-crypto project. And that was, the available assets to grow the DeFi ecosystem. And the conundrum I saw was that the growth of DeFi as an aggregate would be limited by the assets available to it. And that, if you looked at what was in crypto, it's like, this big, for those listening and not watching, it's like two little fingers, close together. But the assets off chain, all of the rest of the wealth, recorded in really bad ledgers, recorded in spreadsheets and like physical paper that sits in filing cabinets, that wealth is so much larger. I mean, hundreds of trillions of dollars that, doesn't live on chain. And the realization I had, which became like an incredible motivating factor for me, was that by bringing these off-chain assets on-chain, the total addressable market of DeFi, in the aggregate, would have a significantly larger upper bound in the order of multiple magnitudes. And so,
all right, so you guys understand, right, what he's talking about, hopefully. And again, I know that we have new people flowing in. He's talking about all the money that's off-chain right now and how small not only the crypto ecosystem is, but then inside the crypto ecosystem, how small the DeFi ecosystem is. It's like this big. And he's talking about all these assets that are off chain that are coming on chain over the next consecutive couple of years. We're going to see growth in the order of magnitude that nobody can even fathom. And so this is the reason why I'm playing this video clip, which is, again, from 4 days ago, people, has 92 views, just to show you guys exactly what I'm talking about in reference to nobody is paying attention to DeFi. People are in the crypto ecosystem are sleeping on DeFi. Getting your digital assets to work for you, to grow your wealth in the now, scale your bags, and then be able to maintain that wealth after the next bull market cycle in this digitally native ecosystem in which we are headed into aggressively. Okay. So for those of you all who just rolled in, again, throughout the remainder of this video breakdown, my goal is to show you all that financial institutions are 110% going to be utilizing and are actively able to utilize DeFi protocols right now to scale their wealth, to earn yield on their digital assets, and how we as retail investors have the upper hand over financial institutions, which I already just played a video clip of the DTCC representative telling you all that that is to be the case. And I'm going to physically show you guys examples of how here in the Wealth 28 Club, we are taking advantage of earning a higher yield on the same digital assets as institutions right now than they can. Okay. And I'm going to get to that portion of the video clip where I show you guys a physical retail example of how we can earn a higher yield on specific digital assets. Same thing that these financial institutions can do, but we're getting higher yield right now. Okay. We'll get to that portion. First, my goal in these video clips is to show you guys that we are early, we have an upper hand, and that institutions are interested in DeFi. So there was that video clip. This gentleman, Robert Lishner, the CEO of Superstate, again, a large aggregate, collective group of institutions that are fixated on DeFi and growing in this Web3 ecosystem. Okay. Moving on. This is a video clip from just 2 days ago of the co-founder of Chainlink, Sergey, interviewing some reputable individuals. I believe this individual on the right-hand side here in the video clip, he is from HSBC, if I'm not mistaken. And he's asked the direct question, are institutions going to use DeFi? And he specifically says, absolutely. And the reason why I wanted to play this video clip is because, yet again, here at CYPRX, we do not give you guys our personal opinion. I don't wake up in the morning and I'm like, oh, I'm going to make some content today trying to show everybody that institutions are coming to DeFi, because I personally believe that institutions are coming to DeFi off of no or nothing backing my statement. I believe that institutions, are coming to DeFi because the institutions are the one telling you this. And so it is my goal as a messenger, as an influencer, and as a individual in this space with a large following, to wake my followers up, to get you guys to see what not a lot of people are seeing, and that is DeFi. Okay, so check this out here. Just listen. It's like a 30-second video clip. Sergey asks the representative from HSBC. Let me just see if the gentleman's credentials are here. Let's see. They're not in this clip, but I'm pretty sure, I'm almost 110% this gentleman is from HSBC. Let's see. Let's go back to the beginning real quick. Let me see. Yeah, so Benjamin Kodroff is the gentleman's name. He's from, you can see right here, HSBC. Okay, so you know that he's from a large institution. He wouldn't be on stage just making this stuff up. So let's go to 2 minutes and 14 seconds in this video. And again, this video is from November 1st, 2024. So it's recent and only has 1,200 views. There's millions of people involved in crypto and billions of people on this earth. And only 1,200 people, now including 272 listening to this video today, have now seen this. So take a second here and listen to what he says.
The DeFi and TradFi will become each other's users in the coming years. How do you see that evolving? Ben, I'll start with you.
Sure. I have both personal and I think for the traditional and the bank sense, I'll start with the bank. Look, we're building on the shoulders of giants. A lot of the actual smart contract and other capabilities came from Web3, came from DeFi. Credit where credit's due. Thank you. I mean, this is things that we actually need to provide better customer experiences and new ones. I think that's where the opportunity is that we can take these concepts that have come from Web3 and make it work in a traditional banking setting. These could be anything from the primitives like identity to looking at how we can do decentralized identity, making that work for cross-border type scenarios in a trustworthy manner, and being able to make new programmability on existing real-world assets. That's the big opportunity. Personally, yeah, I use both the bank and I use my crypto and Bitcoin. I mean, I think that many of us are actually in both worlds already, unless you've gone full cypherpunk. And this is where I think we need to get to is to take more of the ideas that are continually coming out of the public space in Web3 and make that work in regulated institutions.
But do you see TradFi becoming a user of DeFi at some point?
Absolutely. Absolutely. Absolutely.
Boom, right there. Like simple, plain and simple, straight to the point. I love panels like this where they don't beat around the bush. Sergey asked him, do you see TradFi utilizing DeFi? He said, absolutely. That's not coming from CYPRX. That is coming from HSBC. You guys see what I'm saying? Again, smash that thumbs up button and subscribe if you have just tuned in. If you guys are listening to this recording now, you see, I mean, this is so monumental and nobody's paying attention to this. As we progress through the rest of this video breakdown and we get to the fundamental side of things, and I actually physically show you examples of how, as retail investors, you can front run the banks right now, it's only going to enlighten you further to be like, I have an aha moment. I could be earning yield on my digital assets right now for free by doing nothing but deploying them into the DeFi ecosystem, growing my wealth right now by being a participant in DeFi. And as you progress in your DeFi journey, you're going to realize, oh my gosh, this is how I'm going to digitally maintain my wealth in the future after the next bull market cycle by not selling my assets for fiat and continue to earn yield on them over the consecutive next couple of years, maybe over your lifetime. Okay, depending on your own personal strategy, right? So I just wanted to give you guys that physical proof. I mean, that was a banger right there. I mean, 30-second video clip just confirming from a large institution like HSBC that they are going to be utilizing DeFi. Next, we have this video clip from Chainlink YouTube 5 days ago. This is Sergey talking about how they are in an attempt to power up DeFi and bring it over to traditional finance, and how they're bringing solutions to the market right now in real time in order to do this. So this just confirms financial institutions are going to be able to utilize public blockchains to integrate into DeFi. Just take a second here and listen to what Sergey says.
Amazing job as a community powering DeFi, powering the best DeFi protocols, keeping them secure for many years, processing trillions of dollars in transaction value successfully. That is amazing. And we're going to continue to do that. And we're going to continue to improve the technology that does that to create a standard there. But I am convinced that the DeFi community will, and already does, see the TradFi community as their biggest user base. If that is true, which it is, from like the hundreds of meetings that we've had at this point with both of those communities, it's pretty clear that the valuable tool set and the valuable set of standards is the tool set and standards that unify these two groups into a functioning market, which means you need to meet the requirements of both groups. You need to make them both.
So I'm just going to pause it right there. He literally just confirmed on stage at Chainlink SmartCon, this is from 5 days ago, they posted this on their YouTube, right? That TradFi is going to be the biggest customer of DeFi. They're going to be the biggest user of DeFi, right? And he said, this has been confirmed by the hundreds. He didn't say a couple. He said hundreds of meetings that they've had behind the scenes with both the TradFi and DeFi community. Again, showing you guys physical proof that this is not my personal opinion. This is coming from reputable individuals in this space telling you guys that this is to be the case. I'm just here as a messenger trying to get you guys and enlighten you all to see that you all, at least at a minimum, should be educating yourself on DeFi. Even if you're a little skeptical about it and you don't know a lot of it about it, it's still time to get educated. It is time. It's not time, like I said, to revert back to the beginning, how I opened this. Now is not the time for fear. It's time to be well-informed, diversified, and strategically positioned for the upcoming wealth transformation. And through the utilization of DeFi, you all are able to do that. Moving on, okay? Now, this is another individual from 13 days ago talking about how we are early, and we are in the early stages of large-scale institutions flooding into this space. So just take a second and listen to this video. Is from 13 days ago.
Past year, I've seen a lot of mainstreaming and financial institution adoption of blockchain. So we used to ask, are banks ready for blockchain? But now we're looking at how they're adopting it. How are you seeing those levels right now?
Yeah, I completely agree. And I've been on that journey for a number of years now. And being at Sybos, it's amazing to see the contrast, even within 12 months. So the way I described it in 2023 was you could, when we thought about how banks are dealing with blockchain technology, the adoption, and importantly, the problems, the customer problems that they're solving, that adoption level, last year for me in 2023 was palpable. But I think now we've seen an emergence in far greater scale adoption across a wide range of use cases, across a wider range of geographies, and with a wider group and array of participants. So I think we've really made that transition from it being palpable to now we're starting to see that it being tangible. And these first tangible points about really not just POCs and pilots, but full production scale deployments, live transactions that are being undertaken within regulated financial environments. And so that really, then we think about the nature of how organizations are using this as a stepping stone to then what comes next. Then now we're at that point where the earlier stages of scaling up some of these particular transactions. And I think given the way the banking sector works.
Right. So he just said we are at the early stages of being able to scale up these transactions. And he's talking about regulated institutions actually having tangible use cases and being able to utilize them in this Web3 ecosystem. And this is an individual representative from Chainlink, okay, who again is helping and has helped scale the DeFi ecosystem in the billions, right? So I'm just saying, you guys got to start paying attention. Now, to further my case, let's get into the nitty gritty as we transition and we start to read through the fundamentals. I'm going to physically show you guys examples of how traditional finance has access to DeFi. They can take their digital assets, they can go and deploy them in the DeFi ecosystem, and they can earn yield. We as retail investors have access to the same exact digital assets, except we don't have the same regulatory restrictions that are hindering us from buying these digital assets and deploying them into the DeFi ecosystem that these regulated institutions do right now. So yes, these DeFi solutions are available to these institutions right now, but are a lot of these financial institutions actually deployed in the DeFi ecosystem, buying up these assets and earning yield on them right now? No, they're not. However, we as retail investors, we can. And we can use these digital assets and these DeFi platforms to grow and scale our wealth in the now, even if it's a small percentage point, earning some type of digital asset every single day on the digital assets that you already hold, in my personal opinion, should be everybody's number one goal. Everybody's number one goal. If your digital assets are doing nothing but sitting in cold storage, collecting dust, you are literally just accepting your fate and moving from the old, outdated, decaying traditional financial system into this new one and taking all the old bad habits of the old traditional financial system over to this new one, and you're not benefiting from it. Because these digital assets, again, the terminology assets, are meant for us to scale and grow our wealth, to be utilized in the form of use cases and all the things that we can do with them. And most people are just buying them and hodling. And it is because we've been manipulated into believing that that is the key to wealth, to buy up these assets like XRP, for an example, who for the first time this year has now an integrated AMM feature where the DeFi ecosystem on the XRPL is going to continue to scale and grow. And that is happening and has happened now for the first time ever this year, right? So you guys have to really, truly understand that this transformational system that we're moving into, this new digital infrastructure, has been created for us to be our own bank, right? We as individuals can be our own bank now. We don't have to rely on the traditional system that has been screwing us our entire lives and decaying our capital over the life of our whole entire existence. All right. It's time to change that mindset. And even if it's just a small percentage that you're earning yield on in your digital asset portfolio, it's still worth it because it's growing your wealth. And I'm telling you guys, just watch. I'm going to show you. I'm going to physically prove. So this is a panel discussion that took place October 25th, 2024, has 44 views. Okay. Again, in an attempt to show you that nobody's paying attention to this information, only here at CYPRX, we're showing you guys the realest stuff. So now there's 372 people listening to this call. 44 people in the digital asset ecosystem have watched this recording. There's millions of people in crypto, billions of people on this earth again. And nobody's listening to what these people are telling you. So this lady confirms that institutions are utilizing these DeFi products, and not only just one institution, but one of the largest institutions, she specifically said, is utilizing this company's, this organization's product. And I'm going to physically show you guys what products they offer. And I'm going to then compare it to what we have the opportunity to take advantage of as retail investors to show you all how, again, we can front run the banks. Check this out. This is insane. So just listen to what she says here.
I think from a staking perspective, we were one of the first ones in the market to do it. And what's exciting is to see the number of networks out there at the moment who are utilizing this methodology to secure their network. We're seeing the maturity of the technology as well, both the networks that have existed for a while who are maturing their own technology or the new entrants to the market. There's the NORS, the Node Operator Risk Standards Initiative, which we're very, very excited about, which is looking at really bringing in third-party certification for validator operators to ensure that, you know, validator operators are really meeting institutional needs when it comes to risk management, and that they can have that form of certification that would meet the standards of an enterprise due diligence. We are broader than staking, though. It is one of our products. So from a company perspective, we're really excited about some of the stuff that we're doing around our wallet technology as well. One of our products we're going to announce soon is being used by one of the world's largest financial institutions, live in production, which is, very exciting for us. And then we're just continuing to.
Right. So she just openly admitted on stage that one of the world's largest institutions, is utilizing their products. Okay. Now, who is this lady? Her name is Amor Sexton. She is the I don't know, it doesn't say what her credentials are from this organization, but she is from Block Demon. Okay, so let's head over to Block Demon, and I just want to show you guys, this is where we're going to get into the portion where I'm showing you all that you have the ability to front run the banks. So this is blockdemon.com. You can see right here, it says, we power the blockchain economy, the complete institutional solution for seamless, secure, and efficient Web3 services. You have individual organizations down here like Citi, Goldman Sachs, JP Morgan, again, some of the largest institutions here listed, Microsoft, Plaid, Circle, so on and so forth. Okay. Well, if we come right down here, you can see that they offer staking solutions. Okay, staking solutions. It says right here, our institutional staking solution is easily accessible through our Block Demon wallet or as a standalone solution via our staking API, liquid staking, white label, and public validator. So these institutions have the ability, if you scroll down and look at the supported protocols, to get these digital assets and earn yield on them, just like you do as retail investors. But I'm going to show you guys yet again how, as retail investors, we have retail platforms that are allowing us to earn higher yield than these institutions can. Right now, institutions, okay, this is Axelar. We were buying Axelar at 50 cents here in the CYPRX community. It rallied all the way up to 90 cents after we were buying it at 50 cents. You can see that institutions right now can get a 7.25% for staking on this platform. All right. Well, again, to revert your attention back to what I said to you guys, retail investors have a once in a lifetime opportunity. And I showed you guys the individual from the DTCC telling you all that retail investors are front running the banks. I showed you guys this platform the other day on a live call called Exodus, right? In the private CYPRX Wealth 28 Club community, we have a video labeled low risk DeFi strategy, auto restaking and staking on this platform. We made it for the private community just a couple of days ago. All right. And on this platform, this retail web wallet, you can see if you click products and you go to earn crypto rewards, this is a platform, a Web3 wallet where you can stake your digital assets and earn APY. Well, if you come right here, you can see that on Axelar, the digital asset, we as retail investors, we can earn 8.76% APY. Now, I know a lot of you listening might be like, oh, that's not a lot of money. 8%, that's nothing. But the thing is it's consistent. It's slow and steady gains that are low risk, that are going to continue to scale and grow your wealth, not only in the now, but after the next bull market cycle. This is a physical example on how institutions, they only have access to 7.25%, according to this platform, to stake their XLR. And we, as retail investors, have access to 8.76%. This is now physical proof I've shown you guys that we as retail investors have an upper hand against the financial institutions for the first time in history. This is monumental, okay? A lot of people might be like, oh, percentages are low. Again, you got to handle your greed at the end of the day. But this is so extraordinary. Now, if you scroll down on their platform, they have the ability for you to calculate the potential reward. So I just want to show you guys again. Let's say, for example, you have, we'll click the digital asset XLR because they have multiple digital assets that you can go and you could provide on this platform and earn yield on by staking. All right. So if you go to XLR and let's say you have 20,000 units of XLR. All right. So let's give or take roughly right around there. And you stake for a 12-month period. All right. You're going to increase your portfolio doing absolutely nothing by 1,760 units of XLR for just holding it on this platform, okay? Doing nothing. You're earning rewards, you're earning yield, and you're growing your wealth. Now, it's not a lot of money. I get that, okay? But the goal here is to consistently grow and scale your wealth and utilize the DeFi ecosystem to earn rewards, to earn yield, to earn passive income. Because let's say, for example, XLR goes in the future to $20, okay? You do the math on owning 20,000 units of XLR, and it goes to $20, and then in the future, you're utilizing the same platform, earning 8.76% on that number. your numbers scale significantly at that point. Okay, so don't think so short term. Think in the now of how to grow your wealth, and then think long term how you can maintain your wealth. This is a platform that we as retail investors, we don't have to sell our digital assets in the future for fiat, again, into a traditional system that is decaying, that is dying, for fiat currency that has been depreciated and declining over the past consecutive couple of years at a very rapid pace as governments and as central banks print more money, right? You don't have to sell your digital assets in the future for fiat currency. You can keep them, you can earn yield on your digital assets, or in the DeFi ecosystem, you can deploy them in many other ways. So I just wanted to show you guys this physical example of how we as retail investors have platforms right now where we can access the DeFi ecosystem in the same way that traditional financial players can. As you can see, this is a staking platform that traditional financial institutions have access to with the same digital assets that we have access to, but we can earn a higher yield. Okay. So I don't know what else to show people to wake people up and say, hey, look, DeFi is going to be the future. And right now, as retail investors, we have the upper hand to deploy into the DeFi ecosystem before the financial institutions do. So now you can imagine, I've now shown you guys physical proof through the panel discussions that institutions are coming. You can imagine when institutions come for these digital assets, they're going to be real on these digital assets, but these digital assets are not going to be pennies on the dollar. Okay. They're going to be significantly higher. And so the whole time you were earning yield on your digital assets, accumulating more of these digital assets, your wealth is only going to grow more and more and more over the next consecutive months/years, which is why I suggest, again, not that you go and deploy into DeFi, but you at least get educated on all the opportunities that you have right now to grow and scale your wealth while we wait for these financial players to come into this space, because they are coming. And in the Wealth 28 Club, we have done this for you. We have literally orchestrated over 100 video breakdowns. Here's all of our videos in the Wealth 28 Club and our DeFi University that teaches you about exactly what I'm talking about in detail. You don't have to go to any outside sources. You don't have to surf through the internet to find valid information. It's all right here packaged in an easy, digestible way for you guys to understand what is happening behind the scenes and how to deploy your assets in DeFi. Whether that's you choose to do so now or in the future, you at least have the educational backing in order to do so. All right.